Welcome to the FMLS Market Intel Report. I'm Leslie Appleton Young, Chief Economist for FMLS. Providing a reasonable assessment of where the economy and the markets are headed appears, at present, to be a fool's errand. New forecasts are released almost daily, but with limited shelf life because it's so difficult to rule anything out. In the words of the timeless Forrest Gump, life is like a box of chocolates. You never know what you're going to get. So let's start with what we do know. The March jobs report was a stunner. The BLS reported a gain of 178,000 jobs after the loss of a revised 133,000 jobs in February. And the unemployment rate dipped back down to 4.3%. The Wall Street Journal called it a resilient rebound that blew past expectations and defied concerns about a possible downturn. Retail sales also beat expectations, coming in with a 0.6% month-over-month gain in February, the first monthly increase since last November, and up 3.7% year over year. So far, so good. Not so fast. The elephant in the living room, the unknown impact and duration of the war with Iran, continues to dominate the outlook. Gas prices surged 35% in March, and at over $4 a gallon are already squeezing consumer pocketbooks. Inflation fears have shaken the bond market, with the crucial 10-year Treasury rate rising from 3.97% on February 27th to 4.38% at the end of March, its highest level since July 2025. Recession fears are back as well. Mark Zandi, chief economist for Moody's, noted that even before the conflict, I thought recession risks were on the rise. Recession risks are very high, and unless the hostilities are coming to an end now, I think recession is more than likely by the second half of the year. Wow. Mortgage rates have been increasing for the past 5 weeks, reaching 6.48% on April 2nd, a gain of almost 50 basis points. A hearty congratulations to buyers who closed in February when rates dipped below 6%. Where are rates headed? It's impossible to tell. What we can say with certainty is any prediction for mortgage rates in April ultimately rests on the scope and duration of the war and its impact on global energy prices. As for housing, the hope for momentum as the spring home buying season is at its best subdued, at worst stalled. NER chief economist Lawrence Yun summed it up this way: if mortgage rates stay at or near 6.5%, then home sales may barely grow at all. So while buyers have the upper hand in the market compared to the past few years, rising rates and worsening affordability will keep many on the sidelines. A recent study from economists at the St. Louis Fed looks at housing costs versus incomes by county and brings into sharp relief just how big the housing affordability gap has become. In their analysis, they look at the cumulative change in per capita income and in home prices from 2000 to 2024. Nationally, incomes increased 155% during this time period, compared to a much larger 207% increase in home prices. Next, they compare the county house price to income ratio in 2000 and 2024 to measure the improvement or deterioration in housing affordability over time. A ratio of 100 indicates no change, below 100 indicates an improvement, and over 100 tells us affordability is worse today than it was in 2020. The ratios for the metro Atlanta counties reveal what we already know. Home prices have increased much faster than incomes. Fulton and Cobb counties had the highest ratios at 174, while Clayton was the least negative in the metro with a ratio of 121. Noted the authors, as in most U.S. counties, the cost of buying a home has pulled decisively away from what local incomes can support. This divergence comes as no surprise and helps explain why younger households struggle to buy their first home, while longtime owners increasingly view housing as their primary source of wealth. Take a look at market intel on the FMLS website to access the most current market statistics. They are updated weekly. If you're interested in resources relative to our market dynamics and want to dive into local markets, we've got you covered. For FMLS Market Intel, this is Leslie Appleton Young. I'll see you next time.